And in our top business story, the Dubai financial market has announced that its UAE-listed companies have showed 100% compliance to disclose their Q1 2015 results within the deadline of 45 days from the end of the first quarter. 45 UAE public joint stock companies listed on the DFM successfully disclosed their quarterly results, with the exception of Al Firdaus, as its financial year ends on 31st March, according to a press release of the DFM. Meanwhile, the DFM suspended trading on 3 dually listed companies, including HITS Telecom Holding, Al Madina for Finance and Investment, and International Financial Advisors, which missed the deadline to provide the exchange with full and audited financial statements as per the UAE Securities and Commodities Authority and DFM requirements. The UAE's largest listed developer, Emaar Properties, has announced plans to list a 13% stake in its Egyptian subsidiary on Cairo's stock exchange. According to a filing to the Dubai financial market, the share sale will comprise of a public offering to retail investors in Egypt, plus a private placement to local and international institutions. Emaar did not state when the initial public offering of Emaar Misr would be launched, but said it was still finalizing internal and regulatory approvals for the sale, adding that it will retain an 87% stake after the listing. Emaar Misr plans to use the net proceeds raised from the offering, together with the existing cash resources, to further the development of the non-residential areas of its projects under development, including Emaar Square in uptown Cairo and the Marasi and Mivida projects. The company also intends to use a part of the net proceeds from the offering to expand its land bank in Egypt. The IPO will be the second Emaar unit to be listed inside a year, after Emaar Malls Group raised 5.8 billion dirhams from its 15.4% IPO last September, while the parent firm has also said it wants to float its hospitality unit. The UAE's main airports handled 17.3% more passengers in the first 4 months of the year compared to a year earlier, as local airlines add more capacity to their networks. A total of 37.84 million passengers arrived, transferred, and departed at airports in the country from January to April, compared to 32.24 million a year ago. According to data from federal regulator, the General Civil Aviation Authority. Abu Dhabi International and Dubai International accounted for the bulk of additional passengers. Dubai International, which last year overtook London's Heathrow to become the world's busiest airport for international passenger traffic, saw a 14% rise in passenger numbers to 27.5 million. The figures showed that Emirates and Fly Dubai are driving growth at Dubai International with an additional 12% and 17% of seating capacity, respectively, in the first 4 months. Passenger numbers at Abu Dhabi International rose 27% above the 5-airport average to 7.4 million passengers, with an average monthly increase of 392,577. Additionally, in Dubai, DWC handled 158,216 passengers in the first 4 months of the year, 80% more than the 84,125 passengers a year ago. Al Ain International has seen a sharp increase in the number of passengers this year, increasing by 90% to 10,313 passengers over the January to April period. In March, in Sharjah, 2.6 million passengers passed through Sharjah International from January to April, and Ras Al Khaimah handled 109,411 passengers compared to just 139 a year ago. Real estate regulatory changes, including the UAE-wide mortgage cap and Dubai's doubling of registration fees last year, have contained a market that was in danger of overheating. The analysis was contained in a new report released by Cluttons today, which follows on from their recently released report for commercial property. Its Spring 2015 Dubai Residential Market Outlook report highlighted a dramatic reduction in transactional activity, adding that the 2015 outlook remained somewhat mute, with villas expected to bear the brunt of price declines. According to Clutton's, the first quarter of the year saw overall home values edge downward by a further 0.8%, leaving average prices 0.5% down on this time last year, and 19.4% below the Q3 2008 historic peak. During 2014, just under 1,300 villas changed hands, down 52% on 2013, with the number of transactions during Q1 2015 down 36% on the same quarter last year. Away from the sales market, residential rents have also continued to slowly soften. During Q4 2014, rents dipped by 1.9%, leaving the total rental value growth last year at a marginal 0.4%.